Well, hello world. I'm L.A. Little, founder of Neoclassical Technical Analysis. I want to welcome you to another edition of a TA Wrap. Here at TA Today, we go where there's fail to go. We look at supply and demand. We look at it on the charts. We use it to determine direction and timing, the key elements you need to successfully navigate markets. And we do it in a community basis. We have members that are part of the community, non-professional members, and we share information with them, teach them how to trade and how to be successful in navigating markets. So let's take a look at what's happening in these markets at the current point in time, and let's see what we think is about to take place. Here's the S&P 500. The problem here on the S&P 500 is that you actually have been spending enough time now to actually get another move to the downside. And that move to the downside is going to be ugly if it develops. You know, I like to say that the structure that builds is a necessary but not sufficient condition. And that structure has been building. I'll show you that in a minute. You actually have a long-term uptrend that is way beyond what normally takes place on an uptrend. In other words, this is one of the longest uptrends, one of the longest bull markets in history. And that's why you see this MTTF, which is a mean time to failure measure of trend, so high. But if you look elsewhere, you're sideways, which is a momentary lapse. In other words, you came down, you broke down, you went back up, changed to sideways, and it looks like you're trying to break down again. And on the weekly time frame, you're not extended at all, 11% on the MTTF. You don't get extended until about 60% or so. And so when you look at it from that perspective and everything that's happening here, right, you can see those things we just showed on the cube taking place here, right? Bounces to the downside, bounce back up. You try to get over swing point high, you can't. You come back down, you bounce back up. You die again, head back down. This range has been building out for about 6 to 7 weeks. It's about 6 weeks now. Is right at the bottom of the range, and that potentially is going to break to the downside. If you look at it on a weekly basis, you can see some things here that happened that really shouldn't have happened, and let me just quickly go over those. Essentially, in Neoclassical, we have a concept of a bearish retest regen, and what that means is when you break a swing point low, you're going to come back and you're going to try to break back over it. Well, we have two of those that took place on the way down in October, and if we look at those two, the very first one was this low. It broke here on this. That's the arrow that you see up here. Comes back up, gets back and closes above it. That's a good sign. That says you're probably sideways for now, and actually we did trade sideways as a result of that. But we came back down, we tested, we came back up again and tested, and again we're testing a bearish retest regen in the higher time frame. That one, or the higher price point, that one actually should have failed. In other words, we should have gone higher. We didn't. We turned back around. And not only did we turn back around, we turned back around with a vengeance, right? Did a bearish engulfing on the prior week's bar, and here we are back at the bottom of what has been this little range that was trying to build out. That says more than likely you're going to go down and try to test these lows, and that takes us to the big picture, which I was referring to earlier about the necessary and sufficient conditions. You have a necessary condition, and that is a swing point low that's developed here that is congruent with the swing point low that we just saw on the weekly. We actually have price moving back down to that area. If you break on multiple time frames and you break them on the weeklies and the monthlies, you have a good chance of getting a faster move to the downside. That's the necessary but not sufficient. So you got a necessary condition has developed. Will it be sufficient? That we will find out on the test. It's going to be a critical test. If we do break, if you look at this chart, really is no support until you get back to those 2015 highs. That's 20% to the downside. So that's what lies ahead potentially. That's where the danger lies. That's why we're doing an update. We haven't done one in a while. A lot of danger out here to the downside. If you're not careful and if this thing really does break that way. As with each of these videos, we always try to give you at least one trading idea, and so I'm going to do that now. If we look at this market, you can see, and it's something I've been telling members for a while, that high-tech high beta stocks are struggling, and they've been struggling for a while. Here's a growth IVW, which is a Sp 500 Growth ETF. If we look at it, you can see the growth that's been taking place, right? The pushes that have been taking place to the upside, to the downside. And what you can see here is the break below, and we were just looking at the way it happened on the S&P 500. Well, it looks different here. And if you look at it here, here's a swing point low that was broken to the downside. What happened on the test? Well, you came back up, you tested it, right? Unable to get back over it, right? And now trying to regenerate to the downside. It's going after these lows. Those are the same sort of lows that you'd see over on the monthly chart. If you want to short this market, you want to go where it's weak. This is one place where it's weak and not yet extended. You've actually got ABCD structures to the downside. If it starts to take off, that will take you down to those lows and attempt to break them. So if I were looking for a place to do something, I might look at shorting the growth part of this market. And as a bonus, I'll give you one more. It's the same idea, just on something that's even weaker, and that is the small caps. The small caps now have broken down. They've broken down on multiple time frames. There's two swing point lows here that were broke on Friday, and if you move to the weekly, they broke on the weekly as well. And if you're looking at TAToday charts, you can see that easily, right? The arrow showing you the break. Swing point low breaks, and now this one is at those lows. Broke that one. It's going after the low of the beginning of the year. Much weaker than the rest of the market. And that price point around 1434 is the price point you see right here, 1434 on the monthly. This one's setting up. If the small caps break, that's a prelude to what everything else is probably going to do. The faster move here won't take it quite as far. The highs back in the 2015 on this particular index in the roughly 1300 level. That's where you'd expect it to trade to. That's a pretty good trade to the downside if you want to make it. This is the bar it's going to trade back into. There's your swing point high. That will be the bullish retest regen and will be the first one. You should expect it to get bought when it gets there. That's where you'd want to cover. That's an update. TAToday, LA Little. If you're interested in what we do, you should come over and give us a visit. You can register freely on the site and get delayed information, articles, videos, comments, content, trading ideas. They're all here on the site. All you have to do is register. Have yourself a great one. I'll see you next time.